Let's bring in Tom White, co-host of Fast Market and senior options contributor to help set up the action today. All right, this week of November feels like a normal November week compared to the rest of November, the last week, and a holiday shortened week. How would you characterize the market action as you've been watching it this week?
It's almost, Diane, it's almost like a relief rally at this point. Where those expectations since last Friday, when New York Fed President Williams came out and stated that, hey, he's in favor of another 25 basis point cut. That kind of reinvigorated markets to kind of hang their hat on the fact that, hey, we're going to get lower interest rate environment coming up soon. And remember, those odds for a rate cut were down to 35% just last Friday morning before those comments. Now it's up above 80%. So I think that's lending some support here to equity markets. We've seen the S&P 500 up now 2.5% this week. The NASDAQ's up over 3.3% so far this week. So, we're going to probably start to get that rhetoric about a Santa Claus rally coming into play here. Markets are kind of pushing back, Diane, against maybe some of the negative data that we've seen. We saw that consumer confidence number fell over 6 points. We're getting back to levels that we saw in April during that nearly 20% pullback in the S&P 500. So I don't think we're out of the woods, but then you throw in, lower interest rate environment, the 10 years at 1 month lows, just above 4%. Earnings are still doing okay. We're seeing some moves to the upside here in Zscaler, NetApp, post earnings also. So that's lending some support here to the equity markets. But, it's hard to stop momentum in a week where maybe liquidity is going to start drying up or has started to dry up a little bit, where there's not much as far as headwinds go to keep equities from rebounding from that slide we've seen the first 2.5 weeks of the month.
Well, let me tell you something. Little birdie tells me that Santa may be paying a visit to the stock exchange today, so maybe that will portend what is to come for the rest of the year. But let's talk a little bit about some of the weakness. Nvidia. Now, I was talking to Jay Woods of Freedom Capital Markets yesterday. He said that Nvidia had to hold that 175 level. Well, not had to, but that was the level that he was looking for it to hold. It did manage to do that, but we are seeing some weakness in the pre-market this morning. What's your take here when you look across Nvidia?
Yeah, I think, it did get below $170 yesterday in the morning. It was down 7%, rallied back to finish down only 2.6% yesterday. But it's relatively flat on the week, maybe down about 1%. And this probably goes into that narrative that as competition heats up, the monetization of the AI build out, and then the Google Alphabet news where they're going to start, pitching their TPUs to different companies across the board. That's helped that stock rally to all-time highs, put a little bit more pressure on Nvidia. There were a couple of positive notes here at Nvidia. That's why I'm surprised the stock's down today. Wedbush's Dan Ives comes out and he says it's still the foundation for the AI revolution. Nvidia is. Godfather of AI, Jensen, having the best perch and vantage point to discuss overall enterprise AI demand and appetite for their AI chips. And he stated that it's the Rocky Balboa champion of the AI revolution. So positive commentary out of him. Stacey Rascone out of SocGen came out with a positive note also on this company. But this goes against what Michael Burry's stating, right? He's still got a big put position in Nvidia. He actually responded because Nvidia responded to his bearish sentiment and taking a negative outlook on Nvidia. The company actually came out with a kind of pushback on his commentary, but he's still keeping his bearish bet here on Nvidia. I think the story here, Diane, is we have to get through some of the noise. TPUs, while they might proceed with some competitive advantages over Nvidia as far as price, maybe getting those out there from Google Alphabet. Those are more specialized chips. They can't run the big large language models that maybe the advanced AI chips, the Blackwells, the upcoming Rubin from Nvidia. After that blowout earnings report, it's a head scratcher, I think, for a lot of investors. I think it's a head scratcher for Nvidia itself. They're kind of going through the motions of, why is this not enough for the street? as growth rates of revenue over 60%, EPS over 60%, the raise in guidance. So I think this is a head scratcher for a lot of investors, and I think at some point over the next maybe week or so, we're going to probably get a reset where everybody's going to be back on board, and you're already starting to see that from the analyst community at this point.
That's a great point, especially because, the view previously was it didn't have to be a winner or take all.
Yeah.
Alphabet Google shares, though, are higher right now. Let's talk a little bit about HPQ, its quarterly results, some weakness in the pre-market here. What are some of your takeaways? Yeah,
low bar going into this report with the stock down 25%, getting hit a little bit more, and revenue increased about 4%. Year over year to about $14.6 billion. So pretty decent numbers there. Beat on EPS just a little bit, but then they gave softer guidance. You mentioned the job cuts. The company came out and said we're going to cut 4,000 to 6,000 employees. That's representing a cut up to 10% of their total employee base at this point. But the fiscal 2026 company came out. Their earnings per share for the current quarter, about 73 to 81 cents. That's, within the range that the street anticipated, but at the low range. And then for the full fiscal year, they actually lowered guidance a little bit more. They did cite, Diane, on this report that memory prices, we've been hammering this home. You've seen gains in Micron, STX, Western Digital, SanDisk getting added to the S&P 500. So memory pricing really elevated. So it's helping those companies, but it's bashing back against maybe HPQ, maybe Dell a little bit, that are building out this AI data centers where they need a lot of memory for those data centers, and the pricing is kind of hurting margins for some of these companies. So that's a concern. When the company typically cuts employees like that, we'll see maybe the stock get a little bit of a boost, but maybe that underlying tone that maybe business isn't doing as well as anticipated. And if these memory and input prices continue to ramp up as demand grows and new orders start to ramp up, that could be a headwind for this company and others. And maybe that's why you're seeing a little bit of a pullback, even though the stock, as I mentioned, there was a low bar going into this report, and they still are underperforming.
All right. Thank you, Tom. Appreciate that. That's Tom White, co-host of Fast Market.